Hello, my dear listeners. In this video today, I will be talking about Mar-a-Lago Accord, Trump tariff, and the question I will be trying to answer in this video, which is, in my opinion, the most important question right now: when and how the American government will balance its budget, okay, and what condition is required to balance the budget. I will answer this question at the end, and everything in material presented in this video will help me to actually come to this conclusion, so please stick until the end. So first, what is the Mar-a-Lago Accord and what is going on with the tariffs, because it has a lot to do with American debt and the treasuries and the US dollars. Okay. So you can see here that moreover the US dollar status as the world dominant currency and the US Treasury's benchmark role, its as risk-free assets keep demand for US dollars high. This combined with the Fed interest rate hikes to combination inflation keeps the dollar strong, making US export pricier and imports cheaper. So this is the whole thing, because not only the trade agreement has to be renegotiated, but the US dollar has to be weakening. And if we, if you could please check all those articles, going to be linked below the video, and I encourage you to do more additional research on the situation, because this is Mar-a-Lago report, and what is relates to that. This is the whole thing. This is the biggest thing that is going on. Okay, so how it ties to US treasuries, because the idea is to replace the international holders, and all these agreements will include portion about the tariffs, will include also the portion about the American treasuries, trying to force those borrowers to 100 years bonds with 0% coupon. And any forced swap of the existing treasuries to zero coupon century bond would be characterized as a default. And what is, the downgrades, and of course the US dollar is not going to be world reserve currency anymore based of that, and this financial calamities, cascading defaults, and everything that's will involve from that. So now, about the productivity and jobs, because it's presented to the public, of course it has to be presented something positive. It cannot say, okay, we have no choice, we just borrow it and consume, and now there's no more money for us to continue like this, and we have to do something about it. But what's this article? I kind of agree with the point, and I want to state it. If the Mar-a-Lago ideas and the Trump tariff agenda are eventually successful in promoting manufacturers, will not bring back well-paid jobs in depressed areas. Labor replacement technology and changes in consumption patterns with population aging and rising incomes have done as much as trade, if not more, to change the pattern of employment in the United States. Blaming the reserve currency status for failure of his government to support their people through inevitable structural adjustments, like the blind man describing an elephant. Okay, so basically what they are saying, the idea is here that even I listening lately Cathy Woods about her projection, how the recovery is going to happen, and they are talking about, and even Bassett, the Treasury Secretary, said, okay, there is a technological replacement of the manufacturing, and we'll have all those Tesla robots, some kind of humanoids, or all kinds of robots, that it's only costs right now like $3.4 per hour to operate, and it's decreasing. Maybe it's going to be cheaper. So nobody's want to be able to compete with that. And they don't have to replace 100%. They don't have to replace humans 100% and make it complicated. But if they replace them even at 30%, it's going to be huge. There's going to be less, and those robots, they can work 100 hours per week, no problem, because they don't require vacation. There is only people. There's fewer and fewer people will be required in the production. So, and it's not going to be maybe that catastrophic. because this productivity can be somehow redistributed in social fabric, maybe, but it has to be redesigned and rethought. But there is no the collapse of the U.S. dollar and the U.S. Treasuries. It's not going to bring it's not what is going to be bring job back in America. It's basically what is going to be necessary, because Americans will not be able to afford any more those manufacturing goods, and not to be dependent on the foreigners that might sell them for higher price, because the weakened dollar will make exports very expensive. That could happen. So the manufacturing has to be done in the United States, and maybe eventually those products could become compatible and could be exported, the US could be exported. But this is the speculation going very far in time. So this is about, and I want to also include this one. When I asked the Chinese AI DeepSeek about what are the details of President Trump Mar-a-Lago Accord, sorry, that's beyond my current scope. Let's talk about something else. Means that, for me, that indicates this is very important, and you have to pay serious attention to what it is. Now, the U.S. Treasuries, if you see it's a weekly chart in a 10-year. So it spiked to 4.357. Okay, so, and if you go, you have to go back 2 years to see weekly spikes like this. So it's been kind of consolidating in this 4%, 4.5%, 5% range, and I think it's going to rise going from here. I don't think it's going to go down. Now, dollar and gold chart, weekly. This is a weekly chart. So if you look American dollar index against the currencies, weakening the US dollar, 1, 2, 3, 4, 5, 6 tests of this zone. Consolidation, probably it's not going to go through like this immediately, but it looks that it most likely will go down from here then up, but who knows, there is going to be a rebound. But the gold, look at the gold, the strongest weekly candle, this candle with the bottom wick and the body like this is the strongest candle in technical analysis that you can imagine, closing at all-time highs, almost. Okay, this is the American market. So there is a rotation, and market is selling off, but the dollar index is not rising this time, and the gold is rising. Stock market is falling, dollar is also falling, treasury is also falling last week. So there is a big rotation going out of the American market and American dollars. Okay, so that's what is going on. Now let's go back and see how now we can balance the budget. Okay, so what I pulled from Google: unfunded liabilities, very important, don't forget, 120 trillion, Social Security, Medicare. January 2025, US debt 36 trillions, public debt 26 trillions, intergovernment debt 12 trillions, 722% of the GDP, total American debt. Foreign holders 8.5 trillions. Okay, keep status quo only. It's interesting if the borrowing, what we get from it in terms of the cash flow, we can borrow more than when we pay in interest. Let's say if I have a credit card that I can still spend on it less than I pay monthly, it's in terms of the cash flow, this while I'm spending this credit card, it doesn't cost me any money. I'm getting money from it. So as long as the US government and the American public could still use a credit card, we will be keeping. But if the cash flow reverse and become negative, let's say the payments are becoming higher than what you can spend, or you cannot spend anymore and you have to pay at least the interest and the minimum payments, then the cash flow becomes really negative. then basically you can be looking to ways to get rid of it, try to get out of this contract. So the US total debt, let's look at the deficit now. The US total debt increase in the last year, okay, 2.229 trillions. I would like to see the cash flow. What is going on? So, okay, so the federal, so the fiscal deficit is 1.8 trillion, and in fiscal year 2024, the government paid in interest 882 billion. Triple since 2020 because the 0% interest rate. So what my calculation here, I'm not sure if it's exact, but I took increase in the debt minus interest payments, and basically American benefited by 1.4 trillion. So that's how much American government get out of the this magic credit card. So the cash flow in 2024 was very positive. So if they keep doing it, they will try to keep doing it. There is no point of balancing the budget yet, right? If it's possible. Now the projected interest payment on the US debt for 2025, 13.5% of outlays. I don't know what does this mean, but 386 trillion in the payments in the first 5 months. Okay, so in the first 5 months, the near-term projection and the marketable national debt, because we still have lots of debt at the low interest rate that is rolling over and maturing at the higher interest rate. So this is 3.33, but it's highly depend on what's going to happen with the American debt interest rate on long-term interest rate. So we're looking here about maybe $1 trillion in interest payments in the next 12 months, my rough estimate. So my conclusion, US will only balance the budget after total default on its US national debt and partial default on its Social Security and Medicare obligations. Why? Because the current system, financial and social organization and political, is not designed to pay any kind of debt. Like you designed to expand, this number has to be positive. The difference between what it has to be cash flow, this providing basically, printing the dollars. I cannot see how basically American government and American public could agree, okay, instead of receiving 1.4 trillion, we're going to start not only balancing, but we will have to pay. So it's going to be cash flow negative for us. This is going to be so dramatic and unsustainable and impossible. It will basically choke everything, our economic growth, and nothing is possible. So they have to default first, and then while the dust settle after this, default and new monetary deal that we will have, and this is actually happening right now. It's not happening like in 5 years from now. I think so. It's already could like happening slowly. It could take a few years, but it's already happening. And what we see, these strange things that we've seen in the last couple of days, that's what's the indication of that. So thanks for watching, and please like the video to support my work.